Um, we are live. Merry Christmas. Happy holidays, ladies and gentlemen. We hope you guys are having a fantastic time. Bitcoin at new all-time highs as a Christmas gift this morning. It was rather nice to see. I want to go over an article today by, I think its name is Bill Richardson. We're going to be taking a look at reaccumulation and distribution. Sorry, Bruce Fraser. You guys would know him. He's from the Wyckoff power charting section on stock charts. What I like about this is there's a lot of time invested into understanding these trading ranges from the Wyckoff type of mentality. And one of the difficult parts about reaccumulation and distribution is they can look so shockingly similar. Now I'm going to read this article to you guys, and we're going to go over it together because I think it's important. And as you know, the truth of the matter is I'm always learning as well. This is kind of a refresher because I can't tell. You know, part of my intuition says we're going to go higher. This is like the backup phase. We should see a spike outwards. But again, the difficult part here is distribution and reaccumulation can look so similar. We're going to try and dissect that today. And then we're going to use the last part of today's stream to basically hang out with you guys as it's Christmas for maybe like an hour and go over any random thoughts and questions you guys might have. So what we're going to do here is kick over to this article written by Bruce Fraser, and I'm just going to kind of read through this. So, rev up with reaccumulation trading ranges. So again, you can find this information for free on stockcharts.com. They've got a few great articles on Wyckoff. There's a bunch of great content for free all around the internet on many multiple things that you'd probably like to learn. But first, let's just start from the beginning here. I'm going to read this whole thing to you. In the course of every long uptrend, there are extended pauses. The longer the trend, the more pauses there will be. In terms of duration, they can last as little as a few months or as long as a year or more. They're designed to torture long-term holders with protracted periods of boredom. As with all aspects of the price cycle, Wyckofians have discovered the principle governing the dynamics of the trading range, or this extended pause. In the post, we'll introduce the concept known as reaccumulation. Now again, we're going to make a comparison between accumulation and distribution. Once a trend emerges from accumulation and it begins to mature and changes internally, as the trends begin, strong holders, also known as what we call comp man, of the stock are in the uptrend and there for the long ride. Traders will typically not hold on to the stock for the duration of the uptrend, as they will repeatedly take profits and leave at the early signs of trouble. This is always a difficult one too. The composite operator has the intention of staying on the trend for the entire multi-year move. Think about that multi-year move here potentially. They expect pauses in the uptrend that occur along the way to the final conclusion of the bull move. The comp man will use the reaccumulation phases to add to their holdings. Wyckofians also use these reaccumulation phases to initiate the position or add to existing holdings. So as the trend continues to mature, the activity becomes dominated by trading in contrast to investing. For a period of time, an accelerating momentum in an uptrend can be very profitable. Accelerating prices have widening price spreads, daily and weekly, high volume, upward and downward volatility, and are signatures of the late stages of this trend. A condition of approaching exhaustion, recall from our other posts on trends that common conditions at the conclusion of an advance is the throwover at the top of the trend of the channel. A throwover is a classic sign of exhaustion and often coincides with the buying climax, which is the stopping action of a price. The uptrend becomes so overheated with speculation that a blow-off price movement ends the advance. The buying climax at the beginning of those two conditions of distribution and reaccumulation look very similar here for this reason. This is significant because one condition includes with the resumption of an uptrend, reaccumulation, and the other is the termination of that uptrend, the first step in the formation of a top, referred to as distribution. Mr. Wyckoff can help us make important distinctions between these two scenarios. So the condition of reaccumulation and distribution begin with the same action in the same manner. This is the stopping action of the prior trend. What follows are large and often long trading ranges. After the buying climax, an automatic reaction follows, which is a big volatile correction that is far larger than the corrections within the preceding uptrend. Now, we haven't seen these yet, and this is one of the kind of signs and signals we're looking for. We don't know when that will happen, but it will happen. So we're keeping an eye on that particular moment because, again, multi-year bull trend is likely what we're leading into here. Just started, by the way, in March. Bull trend just started in March, so we're not too far on in this multi-year cycle, only about 9 months. So We look for the trading range to be largely contained by support and resistance for the few weeks or months ahead, during what the time Wyckoff will study the price and volumes and cues of reaccumulation or is occurring after distribution. Initially, we look for these series of secondary tests, and as the trading range grows longer and longer, trader pessimism is on the increase. Again, the momentum traders are long gone and speculators are fishing now in different waters. Sometimes the catalyst for the pause is bearish news or a disappointing quarter, blah, blah. None of those things really matter here. Again, this is why I'm leaning towards reaccumulation. But the composite operator is using his turn of events to begin reaccumulating even more. Just in the initial accumulation, the CEO will systematically absorb share prices as prices correct towards support and will cease buying activity as the prices rise back to resistance. It becomes harder for the price to return back to support, and then will be reflected by the vertical bar chart. That's not something we've gone over yet. It takes a lot more time and practice here. We're just going with the regular bar chart. A common mistake is that traders make with reaccumulation is to conclude it as distribution, and they initially short sell this campaign. We'll study this in detail for now. The key points are made during distribution. Volatility volume increases and the trading range matures and prepares for a bearish downtrend. During reaccumulation, the opposite takes place because of the principal absorption. So I'm going to read that again because this is important. This is about our volume, which we're going to go over next. A common mistake that traders make with reaccumulation is to conclude that it is distribution and they initiate short selling. We will study the detail for now, but the key points to be made aware of: during distribution, volatility and volume increase. So we're going to have to take a look. Does volatility and volume increase or does it decrease, showing reaccumulation? So here again, you can see the standard reaccumulation chart that we've looked at a few times. And again, here's where it can seem difficult because this last sector, 11 at the LPS, which I'm circling with my mouse here, is the area that often looks like the UTAD. But what we're looking for now is decreased volatility and decreased supply with that rising price. Opposite of what a lot of people think, but you want to find rising priced off diminished volume and diminished volatility here. So we're looking for those two things. So reaccumulations again have looks. Here's one example of absorption occurring in the trading range processes with the creek above to observe diminished volatility and volume. So again, diminished volatility and volume. Declining volume is actually a bullish sign. Now, I don't know where it's got into people's head that only large amounts of supply are actually bullish. That's not the case. Here's a very clear picture of the diminished volatility and the diminished supply as the uptrend continues through each of these trading ranges. So that's what we're going to scroll over and look at next. Okay, well, I'm a little bit too close on the Bitcoin time frame here. Let's go to the 45-minute and the 1 hour, and we can just study this one trading range. So what do you guys think? Right, here's our horizontal trading range. We're trying to right now decipher, is this reaccumulation or distribution? Are we seeing a blow off top, or are we seeing the potentials of the bull trend resuming? Now again, we're looking for diminished supply. Does that exist? Well, it looks like it does. Here we go. Diminishing supply, diminishing supply. Okay, diminishing supply. Even less. Okay. So far, what about the volatility? Okay, here's one of our primary selves. A lot of price spread here with this. Okay. What about the next ranges? Here's our next ranges of sell. Oh, look, decreased price volume. And yet again, here, this next spread, even lower volatility. Right? And hugely important. So this to me looks like reaccumulation because of that decreasing volume. Now again, I don't know where this is probably because we spend so much time in a bear market that people are like, oh my God, lots of supply, higher price. No, it's the opposite in a bull market. Let's look back again. Let's say this one more time. When you are decreasing in supply and volatility and price rising, that is a bullish scenario in a bull market. Now, most people get used to a bear market. I don't know how many comments we've had. No, decreased supply is not a sign of a bull market. In a bull market, it is. You're taking data from a bear market, which is you want to see massive amounts of supply come in for the price to go up because that supply hasn't been shaken out either to the positive or the negative. In a bull market, it's the opposite because now you have less supply coming in, which means there's less so you have more demand and less supply. That means the price will go up because there's not enough supply to meet that demand. This is just plain thinking process here. So please repeat that to yourself. In a bull market, these trends shift and you want to see declining volume and declining volatility with a price rise. And this is what it looks like we're seeing. So let's go out on a larger time frame and see if we can find some of the volatility. So for those of you that are in the private den, we made this post the other night. Just want to look at it closely. We looked at the potential of this being an inverse head and shoulders. So far, it looks like as soon as we broke out of that neckline, you did see this nice upwards trend. And again, I'm leaning towards this being reaccumulation. So we're going to keep an eye on this one because currently we see declining volume and the supply spread is decreased volatility. So again, here, these notes and patterns here. So I hope that makes sense as we kind of go over and go through this learning process. But let's look at it on a bigger time frame and see if we can see something similar. So we'll go out here. This should be on the 4-hour, but it's not. We'll open this up. You can see the messy inverse head and shoulders. And the time frame that these accumulation patterns take to develop is actually getting shorter and shorter as well. This is another way to measure volatility, is actually through time. So I'll get rid of my momentum indicators there. Okay, so here was the primary reaccumulation pattern in October before we had our big breakout. Secondary reaccumulation here, and it looks like here, and even here on this more sideways trend line. And again, what do we see? Okay, we have a massive amount of supply that came in here. This is like a double chest. You probably had a bunch of institutions even take profit at this moment. And again, massive amount of supply come in. Okay, so there's still a lot of supply in the market. That's great, right? But look here, this last run up, the price spread, almost 26% from bottom to top, and the volume is actually almost the same height as this previous price spread. So now we're seeing increased volume or increased price up with pretty much decreased or similar volume to the previous run up from 16 to 19,000. And again, these are the bullish indicators. And here you can see even more clearly the declining volume and the declining volatility in that price spread as well. So both of these things, both on larger and smaller time frames, appear to be leaning into reaccumulation. So keep that in mind. I think it's hyper important to continue to study stuff like this as you guys are growing. Like I said, even though we are in the private group, we go over our own educational materials. The internet is full of fun stuff like this where you have enormous amounts of data. I think Bruce Fraser has written, I don't know how many articles on stock charts here, but the point is to basically digest as much as you can. So shout out to Bruce Fraser for helping us express this idea about declining volatility and volume. I've gone over this price spread idea a few times. I think that article was kind of helped nicely lay it out with the example that we were just showing here of this much larger time frame of reaccumulation. Now here he goes over distribution, and you can see the buying climax is actually brought in by more supply, the opposite of what we're seeing right now. See, again, look, decreased volatility and here specifically, price moving up, but decreased supply coming in, and again, decreasing supply all the way up to the top of this final stopping action where the volume spikes through the roof. So one of the things we wanted to look for was, did this jump cause a spike that was through the roof? And no, it did not. It's decreasing based off the previous parts of this accumulation reaccumulation range. So it appears to me that it has the hallmarks of reaccumulation. It also has that smaller inverse head and shoulders that we made as a post in our in the private group. Again, right here. So I'm leaning bullish. Now, how far we go bullish, that's a much more important question. Again, I think we are in some of the very final stages of our SOS. And we've gone over that before, recognizing that we are, in fact, in a much larger trading pattern. We've spent over 800 days in reaccumulation before we broke out and had this SOS. SOSs can, you never really want to try to pick the top of those. What you want to try to do is find the LPS phases and the bottoms of those, because they provide what everyone likes to call the statistical buy the dip moment. And what's interesting about Bitcoin here is that all these trading ranges at the bottom of the trading range provided a great opportunity for entry, especially if you're not buying with exotics, you're just playing on spot prices. It's a very, we're still in accumulation. I'll say this every video, I guess, until it like really rings true. We're still in early stages of accumulation. Bitcoin's just finally being recognized as a global potential reserve asset for investors all around the world. So we're in the early days of this market cycle. I'm trying to like my best to delete that one dot. Anyways, the SOS Maybe we go to 30, who knows, maybe even go to $40,000. I'm not going to try to pick the top of the SOS right now, but as soon as we see a big LPS, and it will happen, that's like one of my favorite moments. So originally we thought we might go like this and then come down before going much higher. But again, what's nice about this is Bitcoin is just truly showing us how much potential and momentum from this SOS phase. It's giving us clear indicators that it is going to be an extremely bullish multi-year ride. Anyways, I'm going to leave it at that for today. I don't want to go too long because it is Christmas and I'm sure all of you guys want to hang out with your family. I just want to give this quick market update. I'm also going to take a look at just a few of your guys' questions right now. Merry Christmas, Happy New Year, all that fun stuff. Perfect. Ladies and gentlemen, I'm just going to leave it at that. I want to get back to the rest of the day. I hope you guys enjoyed and hang out with your family. We're going to go play in the waterfalls over here. It's always a pleasure. So keep that in mind. We're going to end the stream now by kind of logging off with our intro and our outro. And ladies and gentlemen, get ready for 2021 because this is going to be one heck of a ride. Happy to be here with you all. Boom.